All right, in this video, I'm going to go over the auction process and understanding the order flow. Um, before we begin, please read the disclaimer at the beginning of the video. Read this disclaimer and assume all trades are SIMs, and this is for educational purposes only. All right, right off the bat, we're going to talk about a traditional auction to lay the groundwork. In a traditional auction, you have an auctioneer. He generally has a crowd around him and so forth. And like this auction here, where they're selling cars, antique cars. They'll have the auctioneer up at the top. They'll have ring men around to catch all the bids and so forth. And once the car is at a certain value, say the car is worth $10,000, and they start the car out at $1,000, everybody in the room thinks it's worth $1,000. Everybody will be raising their hand to bid on it until it dwindles down to the very last person. So this is how a traditional auction works, and just for the groundwork. And when you first go to a traditional auction, they'll assign you a number after getting your information and stuff, and then you can see in this auction here, everybody thinks there's value in whatever they're bidding on, except for this gentleman here, I believe. But everybody else in the auction believes that there's value in pretty much in what they're selling at that moment. Now, as the time goes on and the auction moves on, they'll be down to just this person here, for example. She is the last bidder of the item. So everybody else in the room at that moment in time was unwilling to give any more or push the price any higher than that by placing a higher bid than she did. All right. Let me pause it a moment. All right, and this diagram that I made up here gives you a little illustration of a traditional auction, and a regular auction works the same way when it's auctioning up. There'll be everybody's interested at a certain price, at a low price. They think this item's perhaps really worth around $5,000, but they're starting the bids at $500. So everybody holds their hand up and is bidding on the particular item. For the price to go higher, the bid has to move higher. So there'll have to be somebody place a higher bid than the person before them. And it keeps moving up, and there's fewer and fewer people are interested in the auction as it moves higher, till it gets to the point, like I showed to that girl there was only one person left wanting the item. Now, I show you this because I want to illustrate the market profile here that I'll be showing as we get down into order flow, how there was fewer and fewer as it moved higher. And as the price moved higher, the fewer and fewer people were interested in it. Also, in how the price was initiated. Okay, how was the price pushed up? Well, in any auction, you got to have a buyer and a seller, of course. But in an auction, the buyer is the one who places the bids, and in an auction, the seller is the one who's asking. Okay, that seems rather, but it comes to be very important. I'm laying groundwork for something here a little later on. I know this is obvious, but there's a deeper understanding to it. So he's placing bids. He's placing what he's asking for it. All right, for trade to take place here, one of these two has got to come up. Either this guy here has got to come up to her price, or she's got to come down to his price. All right. So I'm willing to give $100 for XYZ in order to, in other words, I'm bidding $100 to buy from you whatever you're selling.
Buyers on the market.
You are willing to sell to me at $200. So for this to work out, one of us has to facilitate the trade.
Buyers on the market.
Either I've got to come up and pay what you're asking, right here, what you're asking, or I've got to come down and take what you're bidding for, one or the t'other, okay? And whichever one's doing that is going to be the most aggressive. He's going to want it so bad that he's willing to pay up for whatever they're asking. Say it's a car, he's asking $10,000. He's only willing to give $9,000, but he really wants the car, so he says, okay, I'll give the $10,000. Or she's got so many cars on the lot that she really needs to dump a few of them. She says, okay, you're offering me $9,000, I'll take it. So she'd be being more aggressive. So that's how that's really important as we get into the order flow, analysis of order flow. All right, now to continue, I'm going to try to walk through this pretty quickly because this is kind of the boring part, but it's really important to understand it. There's only really four different ways a person can place a bid. That the market is going to either be aggressive or passive in the situation. Now there is a thing called a stop limit order that is a little mix between the two, but you're still limiting what you're willing to either get in the market at or willing to get them out the market at, between sandwich between two prices. So, but other than that, basically these are the four basic ways to get in. If you're aggressive, again, you're going to want to pay whatever this guy here is asking right here. So if he's asking $2 for his hot dogs and you're only willing to pay one, but you get really hungry, you got to pay his $2 to get his hot dog. You're being more aggressive. You're really starving. You need the hot dog, for example. However, it's the end of the day, and you've come out of the stadium, and you would like to have a hot dog, and this guy here hasn't sold very many hot dogs today, and he needs to dump his hot dogs, and you tell him you'll give him $1. So he's saying, okay, give me the dollar. I'll come down to your price. I'm being more aggressive then. Those are the two different ways of aggression on that particular thing. Now, if they're being passive, they're placing limit orders. And I am only willing to buy at this price or lower. So if he's buying, you want to buy low, you place a limit order. It comes down to, say, places at $100. If it goes anywhere between $100 and zero, he's going to get filled. Okay, at the first available price that somebody's making an offer to sell at. So he's being passive. He's being patient. He's waiting for price to come to him. All right, where these guys here are coming to price. This guy here is waiting for price to come to him. Same thing with the seller. I'll sell at this price or higher, $100 or higher, and I'm going to wait, and I'm going to be passive about the situation and wait till price comes to me. Now, there's also context when we get into this here, and it gets a little deeper than what I even explained it here, but this gives you a little idea of what's the context of the situation. Am I placing my orders to get in the market, or am I placing them to get out? That's going to be very important when reading order flow. Are they getting in? Are they getting out? And why are they getting in? And why are they getting out? So you've got to learn how to read the psychology of the market when watching the order flow. And it's something that can't be taught. It's like I said, words do not teach, only experience teaches. This is something you'll have to learn by getting in there and trading every day, screen time. An aggressive buyer to get out. I'm short the market, for example, and I have a buy stop just above resistance that will turn into a market order to get me out, or buying at the ask. It will turn into an ask. Paying up to this guy here, what he's asking to get out. This seller here is willing to get him out of the market if it hits his stop. So at any price, really, he's willing to get out because it turns to a market order, and it's going to hit the ask most likely nearly 100% of the time when you hit a market order, when a stop market order gets hit on that. Same thing if I'm selling and I'm short the market and it comes up and I got my price just below support, and a price goes, let's see, I'm short, let me think. Okay, I thought about it and I'm saying it wrong. I am long the market and I have a sell stop just above support. In order to get out, and it turns to a bid. Your market order turned to a bid. It turned to the bid. It paid up what this guy here, he was willing to get you out. He's long, you're long, it goes against you, your stop turns into a market order, it hits the bid, and you're out. So it turns to an aggressive order. So this is very important when reading order flow, knowing if the person's getting in and getting out, and if there's follow through after that, and so forth. And we're going to get into that. Passive buyer to get out of the market. He has his limit orders. It's just limit orders again. But he's got the limit order set to get out. Sometimes he'll set a limit order, like say he got in the market and he was short, and I'm long the market, and the market order, I have a limit order to sell. I'm long, let's see, I have a limit order above me to sell, to get out. All right, I can also, in these circumstances, see the price go against me so bad, and I've seen people do this. They're praying for price just to get back to where they can get out, and they'll have a limit order to get out at where they got in at. Okay, it could also be like that. So there's different reasons that you will look for. Same thing, if it, they may pull this stop down over here, these aggressive orders here, these stop orders, they may pull them down to entry after price moves in their favor so far and it pulls back to it. So you got to learn how to read the order flow when these kind of things are happening. You kind of got to judge where the grouping, where all the orders came in at and why they came in at. And if price moves away from them and then moves back to them, have they moved their stops up to break even and so forth? And where are they taking profits at and so on? And it'll show up in the order flow when you learn to read it. All right. All right. I hope that helps. Same thing with the shorts there. So we got to learn the psychology of the market you're trading. Where are the most likely places, like in the S&P? One or usually 2 points in the S&P. They'll place their stops once they're in the market. So if they get in heavy at the highs and it turns against them, usually 2 points down, that's where they're getting stopped out at. All right. Let's see what else I got in here and get rid of all this stuff. Oops, I got rid of one too many. All right, I want to look at the DOM now and explain a little bit about it before we move on to the order flow. The numbers in this column I got here circled in green are limit orders to buy at that price or lower. Okay, buy limit orders are placed at the current price, market price, or lower. The current ask is shaded in green, so it'll always be on the DOM that I have set up will be in green, and the bid will be in blue, and the current price will be in yellow, and that's just the standard Ninja Trader, the way they do it. Sell limit orders are above the market, and so these are going to be real important. These are the depth of the market right here. How deep do you have to go through to get through all this stuff? Now, sometimes the depth of the market is terrible. This is when we got an example of a very wide spread between the bid and the ask. This usually happens after hours when it's very low volume and so forth. It could happen in a really high excited environment or something where the price is just jumping, but you hardly have time to see it then. But in a low volume environment, you get these wide spreads. Notice there's no numbers in, well, it's on this side here, basically. There's a very wide spread on this side. There ain't on that side, on the buy side. On the sell side, there's still some areas in there, but they're really wide apart. They're like 10, 15 ticks apart right there without counting them real quick. So that's a dangerous situation to be in right there. Let's look at a, let's see, I already looked at that one. Let's look at this one here. Buy and sell limit orders are constantly changing, being added on as well as moved or pulled from the market altogether. Buyers must absorb all active sell limit orders before price can move up to the next cluster of sell limit orders. Now, this is the depth of the market. I look at this to see, and it's constantly changing and flashing in front of me at all times. And but I look to see how many people or how many contracts are in my way if I want this thing to go up. What is the depth of the market? There's 2 contracts. If these 2 contracts get took out and nobody adds to or takes away from, and there's just 2, once 2 limit orders are filled, then price has to move up to the next limit order, the next price level to be for trade to facilitate. This is what moves the market up. Once the limit orders are took out, in combination with the market orders and everything that's coming through the market at the time, but once these limit orders are took out, then price will move up to the very next level. And then once those limit orders are took out, if the buyers keep coming in, taking the limit orders out till there ain't none left, then they have to, if they want to continue to buy, just like a traditional auction, once there's nothing left to bid on there, if they still want the item, they're going to have to go up a tick to buy it. Once there's no more sellers left there, but there's a seller above it, then they have to move up a tick to buy it, and so on. Same thing on the selling side. If the sellers come in and they take out the buyers right here at the bid, once they take out these 2 right here, if they want to continue to buy and there's nobody left, they have to bid at the next price, and so on and so on. This is what moves the price down. Okay.
Sellers on the market.
All right. So I got all here, like these 2 buyer limit orders must be filled before price can advance lower on the buy side.
Buyers on the
10
market.
let's see, 2 right here. 2 sellers limit orders must be filled before price can advance higher. And this is dynamic. It's changing all the time right before your eyes, just like the price moving up and down. That's why the price moves up and down. Okay? If you place a market order right here or right here to sell or buy, you essentially place an aggressive order, like I talked about a while ago. You're essentially being filled at the ask if you're buying. If you're bidding, you're selling. Buying or bidding, or let's see, I haven't got it right, because you will be like to be filled at the ask if buying or at the bid if selling. Okay, so that's what happens when you place a market order. That's what happens when a stop limit order gets hit. It becomes into a market order. Okay, if you hit this ask button right here, you're essentially being aggressive because you're saying I'll pay. Right now the ask is at 1236.6 there or something. You're going to pay that or a little bit higher right there. You may be a little late. These two get filled, and you may end up paying the next level up, depending on how quick you are on the draw there, hitting the ask. But you're going to be being more aggressive. Same thing with the bid. If you hit the bid, you're going to be paying somewhere around 1236.5 to 1236.4. Okay, I could make it bigger. I could see it, I guess. So that's what I'm looking at right there on that. So that's what facilitates the trade. Like the traditional auction, once everybody has, there's more than one here, more than one car, you might say, and once everybody's bid on all the cars that are for sale at this price level right here, if they want to buy any more cars, they got to move up to the next price level. Once all those 6 cars are took out, then there's 12 more cars for sale at this price level, and they got to be took out before they can advance to the next price level. And then they can come back in and defend this by putting more cars in here to sell for more people to have to buy before it can move higher, you see, to see if they can stop the move up. Same thing with the move down. So that's how price moves up and down on the depth of the market. So that's why I have a dome to see up to where I can watch the depth of the market when in a trade. All right, let's look at an order flow chart now. All right, this chart, each vertical bar represents five minutes. Each one of these bars, up and down, is 5 minutes, and at what price, the range it moved within that 5-minute period. All right, these numbers. Let me make this bigger where I can see it here. These numbers right here, right below each bar. If I would add up all the sellers in this bar and add up all the buyers in this bar, and then subtract one from another, I'd either get a negative number or a positive number. And that's what this here indicator does. It's the delta. It tells me that there was 97 more buyers than sellers in that bar right there. Right below that, well, I can't already see that one because I got it covered up, but right, let's say here, there's 93 in this one. 93 more aggressive buyers. And there was 2,251 volume, all total volume in that. Okay, so the aggressive buyers, the 93, the 97 right here, is registered by this right here. This is the visual representation of this. If you'll move over to the bar that made the highest climb right here, the biggest range, there was almost 7,000 contracts traded in that bar, 973 of which were aggressive buyers. There were more aggressive buyers than sellers, I should say. And it showed that there was even more aggressive buyers in that bar at one point, over 1,000 perhaps, and then it moved back down to 973 when it closed, when the bar closed, and moved to this bar here. All right, that's what that measures. Now let's see what I got down here at the bottom row. Oh, this is the delta representing the candle configuration, the visual representation of who's being more aggressive. All right, now we're going to look at a 8 range, which I prefer to use because I'm used to using it and I can see more about what's going on. So in this chart, each vertical bar is 9 ticks. It's an 8 range chart, but if you count them, there's 9 of them in there. I don't know that's the way NinjaTrader or Rancho Dinero works out. And this indicator is an add-on to NinjaTrader. You have to buy this indicator from ranchodinero.com, and I'll try to show. Let me see if I got the website here. Yeah, right here, Rancho. Let me back it up one if it'll do it. ranchodinero.com. Click on his computer. I got the professional version. It's $999 every 3 months or $13.79 for a lifetime license. I believe he gives you a free trial on it, and there's a whole slew more indicators in there than that. He's probably got, I don't know, 20 or more. I don't know for sure, but there's a bunch of them. You know, this is just the tip of the iceberg, what he's got here. I'm showing you. Okay. Each one of these bars is 8 ticks or 9 ticks in range. The blue border that you see around there'll only be one in each box. That's where the most volume took place in that box. What I want to see is who at the top. I want to see this in green. I don't want to see it in red. I want to see buyers. I want to see it breaking this little.
Created.
There was a support level here or a high day or something that it broke through, and I want to see everybody that was short down here. These buy stops turned into market orders, and this turned blue, giving me the highest volume, where all those market orders got took out. Then I don't want to see no more aggressive buying to any extent. There'll be some because of latecomers, but to any extent, the buying should be over right then. There shouldn't be no more buying. Okay, move down here. You can see there was 299 aggressive buyers in that, and there should be a lot of buyers in that because of the stop outs. You can see that there was more buying delta in that to begin with, and the sellers took control and brought it back down and made a wick in the visual representation of this delta of this bar right here. The volume was 2,500, almost 2,550, 2,547 there. It broke down and it pushed back up, and this time, if you'll note, we had the topping out again, and we hit some more stops. People thought we had it short. It went up, and 2 to 3 ticks above that. Let's see, it was like 1, 2 ticks. They had their stops. It hit them. All right, got another blue box up there. Didn't have near the buying in this bar though. There was a lot less people interested in testing this, newbies and stuff like that, because there was over 2,500 in this one. There's only 281 contracts traded in this one, and there was a market delta of only 5 positive after the sellers. So after that got hit, the sellers, you'd have been watching this live, you'd have seen it happening. It's like a moving picture happening in front of you. This is a still photo here. The sellers poured in. You note immediately to sell right there. I mean, there was no doubt. There was no buyers. There was no volume. No nothing to tell you that there was follow through for this thing to go higher. So that's what I look at. Now, back to the mini market profile that gives me. This starts operating and placing vertical bars, horizontal bars out from the right of this, with every measuring the volume that took place at that price. Not only right here, but all the way over through here. Since this computer was turned on, it started measuring the volume. Every contract that was traded. This is a visual representation since the computer was turned on. $98 a barrel. When everybody in the traditional auction, when the auction started at $500, everybody held their hand up wanting to buy the car. That's where they found value. They thought it was well worth $500. That's what this represents. This is where the value is. People didn't find value up here. It was down to 281. You can see here the mini market profile died off up here. And I looked at other profile bars as well as this one. This is not the only one I'd look at. But at any rate, even look at this chart alone, you'd know to sold right there. And I would have had a target right in here somewhere on this, because I know that it will return to the point where it found value. All right, that's what I'm looking at with these. Let's see what else I got here. I do have this, and it's just a 30-minute chart with the mini market profile on it too, and I'll look at where the value was there. So if I was up in here and I sold this, and I know the VPOC was right here, the volume point of control, and low volume area. See, right here it is, VPOC. Volume point of control was right there, 101.85. That's where my target would be in, right there on that. So that's where the most volume took place today. So a short from there down to there would have been where that. It went lower. And notice that it went down into this low volume area and moved right back up. All right, we're getting away from the main topic though. Now let's see some actual trades today. We'll see what we got going right now. I'm not really quick enough. We're testing the high day, and it should have already been in. But wait a minute, we had a lot of volume right there. And the volume increased. Well, we would have. We got the blue box in the higher end of it. Let's raise it up here and make it bigger. We had dying off of aggressive buying as it went up. And then we had all the aggressive buying coming in on the stops right there. And as soon as I seen the sellers coming in, you could have been short. Now this is late on a Friday evening of the 5th of July. It's now 2:17. The pit closes at 2:30. Not the best time in the world to take a trade, is what I'm trying to say. So, but in normal circumstances, this would have been an excellent place to have sold this. Over here's the other 8 range chart, representing a regular candlestick configuration. And let's go back to 1355. Let me do this here. And 1354. All right, right here. We're testing the high day. You can see here where I had a down signal on another indicator I have for the 8 range. And we see we have stop outs here, and it made one tick higher high, and there was probably some more stops. Being it didn't quite get that extra tick a moment ago on the first type, that's not follow through. If it would have been up and hit that area and then came up, it would not. Then I would have considered it add-ons. But being it made a tick higher high, it wasn't follow through. It pushed down, and the sellers came in the market. As soon as some of the ones that are just playing really tight to the vest, they probably had stops put only a few ticks above here. It moved back up, retested the high. What did it do? Okay. And give me another blue box. Give me another blue box. I love these green blue boxes when it's testing the highs. I like them to be red when they're testing the lows. All right. What was the volume doing on the, and I have the volume visually represented down here. The volume was dropping down here. Okay. The aggressive buying was also dying off. We had, you'd expect it on the first round, you'd expect a lot of aggressive buying coming in right here, because that's when the first initial stops are hit. Hit a few more right here, and we did have unfinished business. That 1 instead of a 0, that means that there was still sellers, aggressive sellers, willing to feed them buyers up there. Now, why do I have a 0 at the top here? Why do I like a 0? Okay, you got to think about the psychologicalness of this, how people think. Do you really want to sell in the break of the high day? Do you want to be the first person to jump in the market as soon as it hits the high day with a sell order? I mean, unless you've been doing this a long time. Most people are newbies, and that's why you see the lower volume and the lower aggressive buying here, because those are people that don't really understand what's going on, and they're jumping in at the last minute hoping that it'll go higher because it pushed back up and tested the high day again. But there's no volume, there's no aggressive buying, so 0 sellers, 0 sellers. That's what I want to see. The person is not knowing what's going on in the right mind, thinking, I'm not jumping in this market, selling this market when it's pressing through the high day, and we've been moving up. We're up to $103. This market, it's in an upturn. It's moving up. So that's why you get the zeros right here. And then, and then the sellers, finally, the ones in the know to see what's going on, they come in, and anybody that had been long here is going to get stopped out down here about 10 ticks away. You're going to see some bright red down here where these stop outs occurred. So that's what I mean by the psychology of the market, what's going on. Let me find out where I can stretch this out just a little bit. 45 by 8 and so forth right there and everything, and the volume and everything, and it was pointing on my side, so that would lead me to hold. Now, there's the VPAR, the volume point of control right there, and I have this squiggly line, that's the 13 EMA off the 21 range. Crude oil price is known to hang up there tremendously, and if you look over here, 13 EMA on the 8 range is holding up exactly on it right here. Okay, I also watch the depth of the market when it gets to that point, and I'd have to be really focusing on what I'm doing to start explaining that, and I'm new at that kind of, on that part anyway. All right, let's look and see when it tested this area down here around at the 13 EMA, this red line here is off the 21 range. This is the 21 range chart, and I have this 13 EMA transferred to all my other charts that I'm looking to take trades off of. And we're testing the high day right now. Let's see if we can't get a trade. If it's 0 by 23, how much? 400 and some, and it was 200 and some, so we're getting more volume, you see now. 1,000 and some, still not as much as we did before, and we're at the it's Friday, and we're at the pit close, so I'm not going to take it. But I'd be looking to sell right here. But I see look at the aggressive buying coming in. You see, let me make this chart bigger. See, look at we got that blue box at the top though, and then we would expect to see some stops up there, so we would get that box. So I would be looking here to see if the sellers start coming in. Now they're down in here below 103.27, 103.26. Now we're back up in the buying department, and I'd be watching to see over here the sellers. So 43, I want to see these numbers get bigger on the left. Instead of the 66, I want to see 20 getting bigger. I want to see
engulfing bar
widen it out a little
created.
bit. All right, down to sellers again. Remember what I told you about the depth of the market. They have to take out those limit orders to move down. You know, it's a high risk short there. We'll simulate a trade here because it's late.
Order pending. Order filled.
And see how it works out. And it's late in the day, so it's not a trade that I would take at all. But we ain't got no, unless some buyers come back in there again, it should move on down. And I place my stops 3 ticks above 32. Let's see, 32, 33, 34, 35. Let's see, we're right about 32, 3, 4, 5. All right, there I got 36. And I need one to work for me for some reason. There we go. Okay, now I'd continue to watch to see. I got 13. I just tore them all to pieces. All right, now let's just see. We were in an area here where prices held up before, you see. We look over here at the 8 range chart. You can see that it's held up before. We're in an area where price could easily reverse and come back up at. Because you see these long wicks right here that's failed here before.
Target filled.
All right, and I'm not, well, there it went down by itself. I'm not messing with it. It's there we go. All right, I'm gonna bring it to break even. We'll see how it goes. Let's look for and I'm not gonna move my target either. Like I say, I'm doing a video and I'm not really trading for real. So, all right. Let's look at and see where else this morning that I could have took a trade. I'll look at a 21 range over here when it was hitting the prior low, this 13, the prior high day. All right, let me turn off my
Stop filled.
let me go back here, and I just got stopped out of that trade, so we don't have to worry about that no more. And you can see here where I took a couple other trades right here. I got so many ticks out of it, and I got a -5 on that one, I think, and then this one here. I got 2 contracts off and then stopped out on the remaining at the break even on them. And why did I? Well, I might as well explain why I took them. And these were simulated as well. Yeah, I've been doing a video all day trying to get this video done. All right, right here. Why did I get in? Well, we're lucky here. Drawing tool, arrow. The buyers just fell off all the way up through there. Now, I didn't get my blue box like I liked there. But I seen, and like I say, you have to be watching this as it's happening, like I did that last trade, and trying to determine by what actually visualizing the moving picture as it's happening. Volume dropped off, the aggressive buying dropped off, everything dropped off. Was testing the high day. Would have been better off to got a blue box like I did right here on this one here. And the reason and let's see, I got the target on the first one here. And then on the remaining, it came back and stopped me out, I think, at about a -5 ticks. I ended up making like $50 on that trade. And then I re-entered here, and this one here, I think I moved my profit target on out on this one. And I got out at 45, and I was in at 53. But again, it tested the high day again. Give me, and I haven't, like I said, I moved my stop up 3 ticks above. It came within a tick of stopping me out. And that's what I mean about stops. You see, whoever got in short here, put 1 tick above. They put their stop one tick above the high day. What'd it do? It come up and stopped them out. All these people that got short right in here, 419 of them, got stopped out right there. All right? That's why it told me to sell again. It just nailed them. And then it went up and it did it again. Everybody got short again. It did it 3 times on them. It hit them. You see, I like to have my stop 3 ticks above. All right, let's go to the prior high day again and look at a trade there. All right, here we go. And I remember this right here. Price was coming down. We did have pretty good strong selling right into the prior high day. We got the blue box.
Created.
I didn't get a 0 right here. So I had unfinished business right there where there was two more aggressive sellers there than they should have been. But the volume did drop off dramatically on that, and buyers did come back in, but they didn't come back in very strong, and it did lag along. But like I said, my stop was, after I got my first initial target off, my stop was still 3 ticks below the low of day. So this one ended up would have, well, I wasn't in it, but it would have ended up, I'd have got out up in here somewhere on that runner, where I'd have got in short here, I'd have got out my runners there. All right, let me find a couple of more trades and then we'll end it. Okay, I got the FDAX up here on late range, and I'm looking to see that it's either, I got 2 different charts here. This is the bid-ask chart here. So you go in here and you can change this from bid-ask to, that's background color. Where'd that bid-ask go? Right here. To uptick, downtick. So I'll leave it at the bid-ask. All right, right here's where we're testing. We got a double top. No, we don't. Let's check and see. Let me check and see where this price has done something here today.
Created.
I always take critical levels. So when it was down here about 11:30, from 11:31 to 11:35, let's look at that area there. Right in here. Oh, we was hitting S2 support level, getting close to it. I'd have preferred it went down and hit it. Unfinished business by a long ways right there on that one, 6 by 10. I don't really like that at all with the box, the blue box one up in there. And I don't trade the DAX. I don't see anything there on the DAX to trade. Let me look at the gold here. Okay, let's look at the ZB now. It's really a slow market, and you can really get tight stops, but it's $32.50 a tick, I believe. Let's see where it was testing. Oh, here we go. It's testing these 2 resistance levels here. I see a support level, a resistance level here off of a swing high somewhere, and oh, it's a prior high day. It tested the prior high day. I see the little green triangles up right there. So it was moving up to the prior high day. As soon as it broke through by 1 tick, we got some stop outs. Then we got some follow through. But let's see the volume. I don't have the volume just in letters down here, or numbers instead of the actual visual volume. But 5,000, then it was 6,000. So the volume, 5,000, 6,000. But we got a negative on that. I'm trying to see if there was a sell. I can't see where I'd have sold that either. Right here. I like this. I had a lot of aggressive buying back here. It pushed up on very weak aggressive volume. Volume died off 10,000. Boy, look at the volume in this thing. 4,000. I don't trade it, so that's why I'm finding it interesting. I don't really see the sellers. I'd have to know this market to trade it as well. So nothing I can help there either. So I guess the crude oil is about all I can talk about on this thing. Again, I guess that about covers it. I'm not going to go any further with it. I hope that makes a great video. It just depends on the person watching, I guess. Trade well out there and be careful.